I will go ahead and introduce our speakers. So thank you again for joining us for this brief overview on how you can become a new homeowner. During the session, we will cover...
Courtney.
Oh, great. Thank you, Barbara.
Yes, I have my speech already. I want to do it.
Okay, go for it.
Okay, thank you. Good morning, everyone, and welcome to today's Transform Fresno Annual Summit session, Become a Homeowner Now, the Myth Busted. My name is Barbara Wilson, and it's a pleasure to greet you this morning. I am a City of Fresno resident, a homeowner, property owner, and I serve on the Outreach and Oversight Committee as a representative from the Chinatown District here in Fresno. Today's session will cover information on preparing you financially for purchasing your home building, and preparing your credit, and share payment programs with you that offer low or no monies down, an option available to when you're purchasing a home. Today's presenters are here to provide valuable information to assist in your decision process in realizing the dream of home ownership, but also give you the financial roadmap to make the dream of a home ownership a reality for you and your family. We hope you are ready to get answers to your questions, because today's presenters are prepared to answer all your questions. Please join me in welcoming our presenters, Abel Flores. He's a loan officer at Precision Home Loans, and Jackie Whedon, sales supervisor also at Precision Home Loans. Welcome. Thank you.
Thank you, Barbara.
You're welcome.
Thank you for the introduction. Welcome everyone to the Myth Busting for First Time Home Buyer Seminar. My name is Abel Flores, and I'm a loan officer with Precision Home Loans based out of Visalia and Fresno. I'm joined by Mayra Delgado, who's actually a senior loan officer. She's been in the industry for 25 years now, so she's a veteran of the lending process, and she'll be able to share her insight and all of her knowledge later on in the presentation when we get to our Q&A section. And she'll also dive into some of the first-time home buyer programs that are out there that can help you get into a home as well. So Jackie couldn't make it, but definitely Mayra will be joining us, and it's a treat to have her on the presentation also. And with that said, I also want to thank all of the Transform Fresno Annual Summit organizers, Courtney, Gabby, and everyone else that's involved that helped us get everything set up, and that helped us with the opportunity to speak on mortgages, right? Which is something that's very important to our communities. So we appreciate the opportunity for allowing us to speak. And to get everything started, I pretty much want to get two questions out of the way, which are the most popular questions we get every day, practically on a daily basis. Amara can attest to that as well, which is, what are the rates? And then, is it a good time to buy a home? And to answer the first one, the rates are very good. Historically speaking, they're still very low. As one of my colleagues said not too long ago, if rates were at a 50% discount last year, they're actually at a 30% discount this year. So we're still in very good shape when it comes to the rates. Of course, you have to have the patience to purchase a home, because there is a lot of competition since so many people are out there looking to purchase a home, right? So it's all about patience and finding the right home that you want. And also, is it a good time to buy? Of course. I mean, it's always a great time to purchase a potentially appreciating asset, right? Which is a home, a dwelling. And Mayra will also touch on that later on in the presentation, the perks of becoming a homeowner. So we wanted to get those two questions out of the way from the get-go here. You guys can still hear me, right? Okay, good. And just to get into the actual presentation itself, we have here Meet Your Home Purchase Team. So who are the actual key players that are associated with the purchase of real estate? So whenever we buy a home, we have, of course, our real estate agent that's looking to help us. They're pretty much our advocate here, the person that's going to represent you when you're know what you're qualified for. So you're pretty much just saying, hey, look, you're placing the order for that home that you really want. You're saying, hey, I want Mr. or Mrs. Real Estate Agent, I want to purchase a home in this area of Fresno, 3 bedrooms, 2 baths. I wanted this, et cetera, in this side of the neighborhood. So they're going to help you to make sure that you're getting, one, a good offer, and also to negotiate on your behalf pricing and everything else that's associated with the purchase of real estate. So obviously we definitely want to make sure that we have someone that can represent you properly, that knows what they're doing, and that's looking at on your behalf to make sure you're making a solid financial decision. That's the job of the real estate agent. And you can take it as they're going to drive you around. So they're going to be like an Uber, except for they won't charge you anything. Luckily, the real estate agents, you don't pay for their services. These sellers are actually the ones that pay for those services. So it's always recommended that you get your own real estate agent so that they can advocate and help you finding that right property. So that's our real estate agent. The other one, of course, that you see here on the screen, actually, am I sharing my screen? Not yet, right? Okay, so let me share my screen. Can you guys see my presentation? Okay, perfect. So we had just touched on the real estate agent. Now we're moving on to the insurance agent, and simply put, you just want to make sure you have the right coverage for the actual home that you're purchasing. Of course, it's the biggest purchase of your life, so you want to make sure that's adequately covered in case of any catastrophe that can happen, right? You never know. You want to have the right premium and the right coverage there for that home that you're looking to purchase. So that's very important. You may have to purchase flood insurance or earthquake insurance, depending on where you're located. But that is something that your insurance agent can cover with you to make sure that it all makes sense. And here we have our settlement agent and title company. Settlement agent just refers to your escrow officer. And then the escrow officer or the escrow company, which usually the escrow company and the title company are the same company performing 2 different functions. And the settlement function or the escrow function is just, they're the non-interested third party that's there, making sure that everything that involves the actual purchase or sale of the real estate gets done properly. All the requirements are met, all the money that's associated with the sale are transferred correctly. Anything that can pretty much jeopardize the actual purchase and the sale, whether it be a lien against the property, whether it be a judgment against the buyer, anything that has an effect on the transaction as a whole will be dealt with by the settlement agent. So they'll get that all, make sure everything's good to go so that we have no hiccups along the way. And then the title function, of course, they're just there to make sure that the searches on the property, the names, tax records, once you purchase a home, everything gets recorded properly with the county recorder's office, and therefore you are the new owner. So we want to they definitely want to make sure that everything gets done properly on that end so that there aren't any discrepancies later on down the line. And we also have our home inspector. It's always recommended to actually get yourself a home inspection done, because a home inspection will ensure that the actual property is in good shape. They're the ones that, the inspectors are the ones that actually comb through the whole property, make sure everything's working as it should. And that if there's anything that needs to be fixed, that we can go back to the negotiating table and possibly ask the seller to help us with some of those items that need to be fixed before we can move on to purchasing the home. And the appraiser, of course, they look at the property and pretty much at a bird's eye view. They're more interested in the value itself, making sure that they can get comparables, properties that have sold in a recent time frame that are comparable to the property you're buying, to make sure that the sales price or the purchase price is justified. So that's their major concern. If they do go to the property, they look at the major things, right? Which is that there's no holes in the wall, there's no leaking roof, or anything that's hazardous that can affect the actual, what they call the sellability of the property. So that's the appraiser, which is not to be confused with the home inspector, which home inspector is a lot more detailed. The home appraiser is just there for the the home value, to make sure that value is there. Now, when we get into page 3 here, the loan process, actually, let's go back to what Myra and myself do, which is the loan officer portion, right? We're pretty much there to guide you through the whole process, pretty much hold you by the hand in a way, and be there as a resource so that we make sure that we're, one, figuring out what your current financial situation is, and then 2, what goal you have in mind, right? And 3, figure out how to get there. So our job is to piece everything together. There are no 2 customers the same, right? So every time I meet with someone, I tell them, look, everyone is like a puzzle to me. I have to gather all the pieces, piece everything together, and then figure out how we can help you get into the home that you're looking for. So that's our job. And of course, we're acting on your fiduciary behalf because we're looking at out for you when it comes to the financial aspect of home buying, right? That's where the experience and that's where all of the consulting comes into play. And we're there to maximize on usually the biggest purchase of your life. So, and that's the basic gist of what we do here and the basic key players that are associated with the purchase of a home. Getting into page 3, we have the loan process, which is the pre-qualification interview. That's what Mara and myself do. Focus on figuring out what the actual financials look like, figuring out what the goal is, what you're looking to do, and of course, really figuring out what specifically a buyer is able to qualify for, what program they fit into, depending on what their situation is, right? So someone might be a veteran, someone might be a teacher, someone might be a union worker. All these things come into play, and that's why the application and the interview process is so important, because we have to really gather all the data to make sure that we're offering you all the options possible when it comes to home lending. And of course, when you actually do go into contract, or when you find a home that you like, that's what they call going into escrow. And when we do that, we have to, of course, gather all the documentation needed, which is all your income information, right? Your W-2s, your pay stubs. We have to pull your credit report, appraise the property, do verifications, right? So everything, right now, the lending process is very, very good when it comes to making sure that we're lending to the right person, because everything is verified, right? Not like before, a long time ago, lending was a little bit interesting, where things would just slide by, and therefore we had the market crash back in 2008 and 2007, right? The home crisis. But that doesn't happen anymore, because everyone that's qualifying for a loan is actually qualifying for it, which is great. Then of course we look at our documentation, right? The supporting documentation that a customer brings in, whether it be, of course, their pay stubs, right? Their bank statements, all that information that we need to be able to make a decision. And then of course, everything gets packaged together and is sent over to what's called a mortgage loan processor. And the processor pretty much gathers all the data and sends everything into the underwriter for loan approval. Of course, once the underwriter reviews the information, right, provided, they'll make a decision, and if anything else is needed, they'll make sure to let us know so that we can gather additional information from our borrower. Once we have approval, then we have documents that need to be signed later on down the line by our borrowers. That comes at the tail end of the loan process. And once everything is signed, then we get into the funding portion, which means that your loan funds, and then everything gets sent over to the county recorder's office for recording. So that's when we close out your deal, everything is done, and then you become an actual homeowner. Again, this is a very high level overview of the process, right? But this is just so that you guys get an idea as to how this works. When we do get into the process itself, when you're actually a borrower and we're there for you, we explain all this in much more detail, right? But this is just so you guys have a good idea. Basic do's and don'ts during your loan process, right? We definitely do not want to make any large bank deposits out of nowhere, right? We want to make sure that everything is documented. We have a paper trail associated with your deposits that are made into your bank account. We want to make sure, of course, they come from legitimate activities and so on. So limit those deposits if you have to. Of course, stay current on all your payments, including credit cards, car student loans, and other debts. Don't just stop making payments, right? Because eventually we'll find out if, or of course, your credit can go down, your credit score can go down if you do that. And if we have to pull your credit score again, that can affect the whole process. So obviously stay current on all your payments. And another do is, of course, keep copies of all your financial documents, right? Because we will need that for when we are doing the pre-approval and during the loan process stage. We want to make sure we have all that so that we can prove your information. Don't make any career moves while we're doing the loan process, right? I've seen people where, believe it or not, they've actually quit their jobs right before we actually close the loan, which is not a good thing, because obviously we'll verify if you're still working for that employer, right? If you're qualified at a certain income level with your current employer, and if you decide to leave them while we're doing the loan process, then you no longer have any income. So that definitely affects the whole process. Of course, don't close any credit accounts, because that can affect, again, your credit score. And of course, maintain or improve your credit score as much as possible, right? Don't make any inquiries, don't apply for new credit or anything like that. And of course, wait to make any major purchases until your loan is funded. So if you're looking to buy any furniture, if we're looking to buy another car, any additional debts that can affect our debt to income ratios or your ability to repay your loan, you definitely don't want to do that while we're doing the loan process. And do not keep funds in cash or in an overseas account, right? Again, we go back to the first one, which has to do with deposits and being able to trace and have a paper trail for all of this documentation. If you are, of course, lucky enough, you might have a family member that can help you with your deposit. We can accept a gift from family, and you can use that for your down payment and also what's called your closing costs. We'll get into closing costs here shortly, dive into what those are and how they play into the whole lending process as well. All right. Now we'll skip to, actually we'll go to page 5 here. Part of the loan process also, when you're signing your closing documents, and we'll also need you to bring in your cashier's check, or usually after you sign your closing documents, you'll be able to wire out your funds, which is your down payment and the closing costs. Everything put together is what's called your cash needed to close. And of course, you want to bring in your proper identification rights that make sure that a notary can notarize all of the documents properly and to verify your identity. And of course, anything that has to do with the lender requirements need to be satisfied prior to that. Now, if we go back here to the closing costs again, here we have the typical closing costs associated with home buying, right? And I'll read these off of the screen just to make sure to make it easier here. But the appraisal fee is just an independent professional will give the lender an estimate on the home's market value, which is what we talked about a couple of pages ago. Of course, you're entitled to a copy of that. It is, after all, the home you're buying, so you want to make sure that you can review everything that's associated with the property itself. Escrow and title fees, those are all the fees that are charged by the settlement agent and the title company as well. Those are the fees, and also title insurance premiums. These can provide protection if someone sues you and says they have a lien against your property, right? Lenders required a lender's title insurance policy which protects the loan. So these are protections that can be had to make sure that there's no issues later on down the line when it comes to liens for your property. Recording fees, these are fees that are assessed by the county recorder's office for recording your documents associated with the transfer of the property. We also have transfer taxes. The city or county may charge a fee to transfer title to the property. Of course, you have your homeowner's insurance, which potentially can be a fee as well, paid to the insurance agent. You also have your mortgage insurance, and we'll dive into that in a little bit as well. Some loans require that you obtain mortgage insurance, which protects the lender in the event that you default on your loan. We also have prepaid interest, which is the interest you pay before the first scheduled loan payment that'll vary depending on the day of the month that your loan closes. We also have in there in your closing costs, the property taxes, and then property taxes would need to be paid if due. The amount is determined by the payment due date and will be split between the buyer and the seller depending on the due date. Okay? And inspection fees, we went, again, the inspector, they charge a fee for that, right? No one works for free. So all of those fees are encompassed in our closing costs section. So I know it's a lot of information, guys. So if you have any questions, of course, keep those in mind and or write them down, right? So that we can get to them when we get to our Q&A section. And if we go back here to the step-by-step buyer's guide on getting pre-approved, that's of course our first step, right? We need to figure out how much home you can afford, what you're qualified for. Once we gather all your financials, all your income documentation, piece everything together and figure out what program we can use, that's when we get into, that's when we have a valid pre-approval. Once we know what the focus is, right, that you're pre-approved for a certain amount. And another question that we get asked a lot as well is, what's the maximum that I can qualify for? Just because you're qualified at the maximum doesn't mean that you have to buy a home up to the maximum amount. If you want to buy a little less, right, maybe at 25% of your income as opposed to 50% of your income, you can always do that. It's all dependent on you, but yeah, you definitely don't have to buy a home up to what you're qualified for. It's just whatever you're comfortable with. And once we figure out the pre-approval and we have a focus, we know what we're working with as far as qualification amount. That's when you go to your real estate agent, place your order, and that's when they can assist you with finding the right home, finding that dream home that you really want. And once you do find that home that you like, I highly recommend that you actually go see a home in person as opposed to just seeing pictures. We know that homes look a lot different in person as opposed to pictures, so it's always recommended to actually have your real estate agent take you to these places. So that's very important. Once you find that right house that you like, you'll be able to make an offer. And if your offer is accepted by the seller, that's when you go into contract or you open up escrow. Once we open up escrow, we want to make sure as the buyer that you are serious about the actual transaction. Therefore, they will ask for what's called an earnest money deposit. That earnest money deposit is telling them that you're not just going to change your mind from one day to the next. And in California, for example, deposits are typically 1 to 3% of the sales price. So depending on the sales price and the area, it'll be 1 to 3% of that. So that you need to provide from the get-go to show them that you're serious and that you really want to purchase this property. Especially right now when we have so many people trying to purchase, we want to make sure that whoever is buying a home isn't wasting anyone's time, right? Therefore, they ask for that earnest money deposit. And discount points, simply put, are an additional one-time fee that you can pay to buy down the rate. Meaning that if today's going rate without any additional fees, let's say is 3.5% or 3.5% interest. And if you say, hey, you know what, Abel or Myra, if I wanted to buy down the rate to, let's say, a 3.25%, how much money do I have to pay as a one-time fee to do that? That is what we refer to. That's what we refer to, excuse me, as discount points. So that is an option for you, and we'll definitely talk about that when the time comes. Of course, inspections, you want to get those done right. So it's strongly suggested you get those done right. Usually, especially when you have an older home, if you have a newer home that's been built recently, right, the likelihood of anything not working properly is highly unlikely. But if you have a much older home, then you definitely want to have a home inspection to make sure that, or if you see anything that's suspect when you actually look at the property, you want to make sure you have an inspector check everything out to make sure everything's working the way it should be. All right, so now I'm moving on to page 9 here, contingencies. So purchase agreements and purchase contracts as a whole, right? We'll always have a contingency usually, that can allow the home buyer a way to back out of the purchase. It can also allow the seller to back out of a purchase in case maybe a satisfactory home inspection wasn't, after a home inspection, something was wrong with the house and the seller wasn't willing to help with it, then that contingency can help you back out of the actual purchase. Or if somehow, some way the buyer is not approved for the loan for some odd reason, then the seller can back out. So there's a lot of different types of contingencies out there. You also have people that are buying a home while at the same time selling the home. So the purchase of their new home is contingent to the sale of the, what they call the departure residence. And of course, escrow and title, those are the neutral third party, right, that we talked about a few minutes ago. So we already went over that. And impound accounts, simply put, is an account that we use to collect on a monthly basis your property tax and homeowner's insurance. So if we have to include that in the payment, which honestly, to me, it just makes it easier. I don't like to worry about additional things, right? So if the lender can pay for them and I just pay for it on a monthly basis, then I'd rather do that than have to worry about it myself later on down the line. So that impound account, whatever money is pulled into that account is later used twice a year for your property taxes and once a year for your insurance, your homeowner's insurance. And if you're buying a condominium or maybe a townhome that has homeowners association dues or what they call HOA dues, those can also be impounded. So therefore, they'll be collected on a monthly basis. And here are the last page here of my part of the presentation, basics of insurance. So mortgage insurance, if any, typically borrowers making a down payment of less than 20% will be hit with this insurance. This insurance pretty much protects the lender in case of default or if you go into foreclosure, right? If you stop making your payments, that insurance, which is called mortgage insurance, it protects that lender in case that happens. So someone who puts down 20% or less on the purchase of a home is usually seeing a little bit more of a risk than someone who is putting 20% or more, and therefore they have to pay that insurance. But that is the basic of mortgage insurance that has to be paid out, especially when you have a very low down payment, whether it be 3% or 5% or no down payment at all. You definitely have to have this mortgage insurance for your loan. And of course, the homeowner's insurance, the basic, right, which we talked about. The home has to be protected in case of any catastrophe that can happen, fire, and so on, storm, any damage that can happen to your home. So you'll definitely want to make sure you have the right coverage to protect you and your loved ones. But that is pretty much my part here of the presentation. I'll be passing this over to Myra on the next page, and Myra, I'll help you scroll with it as well. So let me get back to the homeownership perks.
Hi, good afternoon, everyone. My name is Myra Delgado, and I'm excited to be here with you today to just kind of talk a little bit about the homeownership perks. Being a homeowner is the American dream. It's one of the biggest investments in your life that you can make. It's a big commitment, kind of like marriage. However, just that pride of homeownership is just amazing feeling. It's proven that kids whose parents own a home actually do better in school. So it's such a great feeling. It's a way that you can create financial wealth. And just to kind of give you a little story, my grandfather was a field worker in Delano. And every year, he'd come and work in the season in Delano, and he would go back to Mexico. And the money that he would save from working, he would invest it in properties. And so eventually my grandfather was able to create wealth and retire and just live off of his properties, and that was such a great way of passing on homes to his children. And they learned, the value of being a homeowner. I remember when I put an offer on the house that we bought, it was scary. That first night I couldn't sleep. I'm like, what did I do? But to be honest with you, it's the best investment I could have made. And I'm really excited that we did, purchase a home. As you buy a home and as the years go by, if the market's good, it can appreciate. And eventually, you can have what we call equity in that home that later on in the future you can use. If you hear sometimes that people are refinancing and taking money out of their home, that's the equity they might have built. For example, if they bought the home about 10 years ago and they paid, $200,000, and let's say that house is now worth $350,000, you have access to part of that equity if you want to go ahead and, use it to help your children. Maybe now they're going to college, or you want to actually move into your dream home. So your first home, think of it as your stepping stone. It might not be perfect, but it might be something to help you get into your dream home. Plus, you don't want to be paying, a landlord or somebody else money when you can yourself start investing in your own future, because that way you can also take advantage of the tax benefits. We do have also some great down payment assistance programs. You might think, buying a home is very difficult. I know it can be very challenging, but it really isn't. It's part of growing up, and to being a homeowner is just learning the steps. And so some of the things, just to kind of go back, some of the things that we look at as lenders in regards to helping you purchase a home is going to be your credit. So it's important that you work on your credit, on building credit. If you don't have any credit, you want to see about possibly getting like a secured credit card where you have to put a deposit, but after you pay it on time, then you can get your deposit back. Now, your credit is very important because we can see if you're paying your bills on time. You might have a $5, $25 payment a month, but it's extremely important, that if you're paying all your bills, your car payment, credit cards, your rent, we're going to see that, hey, this person indeed is serious about wanting to purchase a home, and we'll see that they can manage to have that expense. So we're going to look at your credit. We're going to look at your employment history. It's very important, that we want to see that you have a stable job. And your income doesn't have to necessarily come from a job. It can come from different sources, such as like Social Security, but it's important that we show that you have a way to pay the mortgage back. We're also going to take a look at the money that you have for down payment. And you say, well, Myra, that's where I want you to come in, with these amazing down payment assistance programs. But it's very important that you have a little bit of your own investment. So part of your tax refund is a great tool or thing that you can use to purchase a home. So we do have programs such as like the USDA, which is a program in rural areas that is 100% financing. The payment is a little bit lower than with other programs, but you still do have to have some closing costs. But in a buyer's market, which means that when it's not so competitive like it is right now, there might be occasions when the seller might be willing to help you with the closing cost. If you're active military or a veteran, we have a program where also 0% down. And, thank you to all our active military and veterans who have served to protect our country. We have a government program, and the government program, FHA, is more flexible with credit. So for example, if you had a bankruptcy or if you had a foreclosure, it's a little bit more lenient with the time that you have to wait. And again, these programs can be paired up with down payment assistance programs. And some of the down payment assistance programs that we have in California can help you with loans, for your down payment and or your closing costs. But again, you do want to save, because the more money that you have saved up, the more purchasing power that you have, and you don't have to completely rely on these programs, and you have more options. But buying a home is such a great feeling. It's the best investment you can make, and we just wanted to let you know that we're here to help you. We're going to go ahead and take some questions. Courtney, if you can kind of guide us through that part, or let us know if there are so many questions in the Q&A. But we would encourage you to apply. You might think, my credit's not perfect, I'm not ready. We would encourage you to apply because we can go ahead and work with you. And as loan officers or consultants, we're going to guide you in regards to what you need to do to get ready.
Thank you, Myra and Abel. Thank you to our speakers for this session. So like Myra had said, now we're going to take questions from the public regarding this session. So for attendees, you will need to raise your hand at the bottom of your screen. And if you're joining us by phone, please press *9 to raise your hand and you'll be unmuted. You can also type your question in the Q&A option in the Zoom, and I'll read it out loud so the speakers have an opportunity to address those questions. So we did have a question earlier. Shauna asked if it was possible to obtain a copy of the documents on home buying, and I went ahead and responded to her and said that all of the presentations and the recording of this session will all be posted on the Transform Fresno website after the summit is over. So you can always go back and look at the presentation again, or even listen to the recording. So feel free to do that. The next question is, can the insurance be canceled once the 20% is met?
Yes, there's different requirements to cancel the mortgage insurance. Mortgage insurance is required when you put less than 20% down when you're buying a home. In some occasions, the mortgage insurance can be removed if you put a large amount of money after you purchase the home. Let's say if you sold a vehicle, you sold another home you had, and you put that towards the principal, you can contact the servicer to see about getting it removed faster than the 10 years. Or if you do home improvements to the house that add value to the home, you can also contact a customer service after closing to see how to go about removing that sooner. One thing I wanted to comment real quick, Courtney, was in regards to like preparing. Another thing that you can do is go to www.annualcreditreport.com. Again, www.annualcreditreport.com. And you can get a free copy of your credit report from all 3 bureaus just to see kind of where you stand, if there's any collections or any accounts that don't belong to you, because sometimes there are errors on there. You can dispute and kind of start working on that. Or also if you have like certain banks or credit cards have where you can see what your credit score is. So that's one great way how you can help prepare.
Great, thank you. Any other questions? Oh, we have one in the chat. Barbara asked, what is the minimum credit score you consider to qualify for a loan?
Well, that's definitely going to depend on the program that we use, but honestly, like Tamara's point, the higher the credit score, the better chances are of you falling into a certain program that you really want. And of course, one of the major factors that affects the actual rate that you'll have when you purchase a home is based off of your credit score, right? So the higher the score, the likelihood of the actual interest rate being lower. But to answer the question, yeah, I mean, anything above, let's say, if you're looking for any sort of the down payment assistance programs that are out there, potentially a 660 and above FICO score can help with that. Usually you want to be in the best financial position possible when you're buying a home, right? Very little debts, credit score is good, your income is there. So, but yeah, that's how I would look at it when it comes to the actual credit score. Anything you would add, Myra, to that?
Yes, so you can go as low as 620. Right now there are some overlays due to COVID, but in other times it can be as low as 580. But again, we want to encourage you to apply because we have a system that will show us as well as what you can do to help improve your credit score.
Great, thank you for those answers. Anyone else? Again, if you're calling on the phone, please press *9, raise your hand. If you're on Zoom, please go ahead and use the raise hand feature and I will call on you to unmute you.
Yeah, and just so you guys know too, regarding the credit, right? Obviously, if there's someone that's struggling with their credit score, we have tools, like Myra said, that can actually help us figure out a game plan so that you can actually improve your score. So that shouldn't stop you at all or deter you from applying, because that's what we're here for. We're here to help you compute a game plan and figure out how to raise up your score if need be.
Courtney, another thing is that right now, like rents have been increasing here in Fresno. And, you know, a lot of my clients, when I ask them how much they're paying for rent, you know, most people will say anywhere from like 1,000 to 1,300. And, you know, right now, something like that is what your mortgage payment could be on a house. And the nice thing about your mortgage payment is that it will be fixed for the 30 years versus rents is the market, you know, as inflation and all of that, you know, the rents go up, whereas your mortgage, hopefully your income will go up and your mortgage will continue to stay the same.
Great point. Thank you, Myra.
One important thing, guys, there is no fee for talking to us, right? We are consultants. You can always feel free to reach out to us. That's what we're here for. So if you have any questions or anything comes up, you can always call us and we can always walk you through the process or answer any additional questions. So don't feel like you have to be scared about paying anything for our services. That's what we're here to do.
Great, thank you. Well, it doesn't look like anybody else has any questions. So I want to again extend my thanks to Myra and Abel for this great session on first-time home buyers. So with that, I will close out the session and I hope to see you in another session today. Thank you.